Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to cover some breaking news that we have on the Iran front. We've also got some poly market updates on some odds on when the regime may fall there. We've also got a couple of trade updates on the U.S. dollar, Japanese yen, the Great Britain pound, Japanese yen. We've got an interesting market profile that we need to look at for WTI crude oil. After the huge action yesterday in crude, what do we have today? We have a very slow, rotational, methodical day, and it's all about market profile and that point of control that I've talked about in the past. So we're going to look at market profile there. Also, the 9 EMA. We've got a 9 EMA long that just set up on the 4-hour Euro USD. We'll show you that as well and take any and all questions. That's for sure. So it's good to see everybody back. Tuku, good to see you, Tuku. Welcome. I'm out in YouTube land. Moses, good to see you, Moses. Welcome. Zubu, I'm waiting for you, sir. I'm here, Zubu. Don't worry. I'm not going anywhere. Jason, welcome back, Shane. Good to see you, Jay. Always a pleasure. Pulling double duty here for the next few days. A lot of fun, though. I like getting up early and getting that early stream before the markets open. Really ugly chop from what I've seen on the U.S. stocks. Even though it feels like they're moving higher, they're in no hurry to do it quickly. So we're in an interesting holding pattern. We've also had some new events that dropped. We had an ISM, we had an ADP Employment Report, EIA Crude Oil Inventories. So there's a lot going on here today that is very, very interesting to me. So let me see. Tina Jing, wow, breaking news. Absolutely, Tina. If I see something, I'll say something. I'm not afraid, but good to see you. Welcome back, Tina. Market is recovering. Yeah, you're basically pairing yesterday's loss. What are we, 700 points off of yesterday's low? In the Dow, that's a big-time recovery. Let's see. Tammy, good to see you. Tammy, welcome. Gold not doing too well. Yeah, it's just sort of rotating around. It's a challenging day. I mean, after the light show we saw yesterday, today was just more of a chop fest. It has been so far. Lita, good to see you. Lita, welcome. Okay, so let's start off with a point of control, and then we'll go to breaking news. But I talked about the point of control in the time price offering chart a few times in the past. It's an advanced idea, but here's the bottom line. The chart I'm going to show you shows where all the volume has been for the WTI crude oil contract, which is absolutely key when we're seeing a market that is as volatile as WTI crude is right now. So we're going to look at the point of control. It's set up on a big round number, 75, what is the point of control? It's the area that's being traded the most. So brief primer. This right here is a good look at a time price offering chart for WTI crude oil. And you can see that yesterday's point of control, this is from yesterday. Yesterday's point of control was right around in here, about 75. You're seeing the same thing set up again. So we saw a lot of volume down here for today's session. So today's session, tentatively, the point of control is 74.28. All right, this is easy, guys. We're oscillating between 74 and 75, and that is it. And we don't really need to know much more than that to make money. So right now, if we were at 75, the point of control, what could we do? We could treat it as what? As support or resistance. Either. You could sell the market, you could buy the market. So the idea is that we're going to do business sort of in this vicinity. If you get caught in a breakout, that's okay. You just get out of the market. But something like this is very interesting that we haven't all this action, all this price action, and we have not been able to shake the 75 level. It's fascinating to me. Remember these outside, you'll also see sort of your value area developed yesterday between 75.81 and about 73.99. And today, where are we seeing our value? Very similar. Very, very similar. So very interesting in this TPO chart. Now you're starting to see price break a little bit above that 75 zone. If it breaks to the top side, that's fine. We just get out. We'll go ahead and let that run for a little bit. Rotational market, really a difficult one to trade. I haven't made a trade on WTI all day long. I actually got caught up in some of the indices a little bit earlier, really waiting for a break that didn't come in the Dow. Sort of developed, but didn't really develop. We had a lot of reason to believe we were going a lot higher in the Dow, and we haven't just yet. So it's been an interesting trading day. Some great trades in the Euro USD. We've got a trade update for you in the dollar yen, and we've also got a trade update for you in the Great Britain pound Japanese yen. This one's ticking higher. We'll go ahead and let that sort of play for a little bit and see exactly what happens in a few minutes. If it gets out of hand and breaks, we'll just ignore it. But if it comes back down, I think that it will, then we'll start talking about it again. In any case, if you want to trade any of the ideas that we talk about today, check out Switch Markets. Bring your trading ambition into focus with Switch. You guys know the drill. Thousands of global markets, 1,000-to-1 leverage, depending on your municipality. They'll also back you. There's a lot of bonuses, credit bonuses over there that'll boost your purchasing power, which is what trading is all about. That's what trading is all about. So you definitely want to be in the markets right now. I think it's an interesting time. The ranges are big, the volatility is huge, but you know. Opportunity knocks. And when opportunity knocks, we have to get in there. And the news cycle has been everything. So here's our breaking news item before we get to our trading updates. Since I came on this morning, what are you looking at here? U.S. submarine sank Iranian warship off of Sri Lanka's coast, Pete Hegseth says, and that's the Department of War captain. So what exactly does this mean? It means that the war is expanding. You're sinking Iranian warships off the coast of Sri Lanka, supposedly 87 dead or 100 dead, something like that, killed more than 80 people. That's a big deal. That's a big deal. An American submarine sunk the Iranian warship that thought it was safe in international waters. He said the attack was carried out by a U.S. Navy submarine late on Tuesday night. It was one of the few instances of a submarine sinking a ship since the Second World War. So what are we seeing? It's sort of you can run but you can't hide type of a thing. When we're talking about this Iranian war, that asset was in international waters hanging out, and the U.S. sunk it. Right now, there has been no official declaration of war from the United States. This is being viewed as a military operation, a special military operation, but you're sinking warships off of Sri Lanka. I mean, this is going to get, we got the updates yesterday, but I covered it earlier today. Strait of Hormuz is now, the United States decided they were going to insure all the oil tankers going through and give them a naval escort. Also, we got an update from CENTCOM yesterday, which was absolutely fantastic, that the guy said basically everything's going according to plan and that, it will all be over soon, basically, is what he was saying. We don't know any of that. We don't know if any of that's true. It's just still the fog of war. But what we do know is this. Now it's expanding. It's no longer regional when you're hitting assets that are outside of the theater. So I'm interested. I think it's a fascinating time really to be trading. It's given us the volatility we need to thrive as traders, and that's really all we can ask. Euro USD, let's get out to the price action here. We'll get back to those poly market odds here in a second. But Euro USD was interesting. It was very, very interesting. We had a situation right here at 38%, 116.43. Was a pretty good resistance zone on this daily. Nice big 3-day sell-off, and then we pulled back right to that 116.43 area, which was fantastic. My compliments to the chef. We do have a developing situation here, though. It looks like in WTI crude oil, we're back at 75. I'll dust back in, but the volatility is definitely picking up now. It looks like we may be loaded up for a move higher. We'll still watch that, but we are oscillating around just a little bit. As far as this 38%, pretty good level. I would keep a close eye on that. 116.50, maybe be in the top side of the Euro USD today. That's not a bad idea at all. But if we do break, I love 117.14s up there, 117s. That's probably the next port of call if we do rotate that much higher off of what have been just two huge sessions due to the Iran war. All there is to it there. Let's go to the dollar Swissy. Dollar Swissy, same type of thing. This is a daily chart. Nice big rally, nice big pullback here, 38% right at 78. And it's been a pretty good scalp. We're still trading right there. But if you take a look at the 30 minutes, not bad. Not bad at all. Not bad. Nice little sell-off there and then a big rally. We went right up there about 78.35. So what we're seeing is the U.S. dollar, some movement in the U.S. dollar, which is key. which is absolutely huge. That's what we want. We want to see volatility, have to have it to trade, and we're seeing it. We're seeing it across the majors, and that's a good sign. That really is going to help us with making our decisions very easy. Now it's just fall back on our technicals, figure out exactly what we want to do, and do it. So USD CHF trading at that key level. Also, you've got the Euro USD doing something very similar. Now, interesting point, when we switch over to our 9 EMA, you will see right here, you've got a Euro USD 4-hour chart that's set up with a perfect buy. It really is a solid buy right there. 4 hours on the Forex. I love that trade. I think that the 4-hour chart gives you a real advantage when you're trading something that's sort of as stagnant as the Forex. So if you're interested, you can put your stop loss way down here beneath this swing low. Now, that's what I recommend in the 9 EMA strategy pack, which if you haven't got, be sure to check that out. But the big thing I would say is that you don't necessarily want to be on the hook for that much with this. You could just let this go and play the swing trade and sort of bet that you're going to get that breakout above 38%, which is great. And if you do, then you're looking to take more money somewhere, maybe up there at 117.50, maybe a true swing trade going into NFP later this week. All right, is that high risk? Yeah, it's high risk. But do we mind it? I don't know. I don't really mind it. I think we could open up and go either way. What if we wanted a tighter trade? Maybe right beneath your signal bar. Now, on a 4-hour chart, I don't mind that. I'm actually working on some back tests that sort of prove that idea that maybe we don't have to risk so much using those longer time frames. So I'm definitely watching that. I think that's a pretty good trade as well. But if you did dial that in at that spike low, maybe something like that is a little bit better. Maybe something right up in front of that 117 level gives you an opportunity maybe to make a few bucks on it. More of a breakout type of a trade, but that's okay. That's okay. We don't mind. Let me see. Ralph H. Good to see you, Ralph H. Wizard Alvin. Good week. Good to see you, Wizard. Welcome live. Bobby Bob. Always a pleasure, Bobby. Andrea Garwal. Thanks for popping in, Andrea. But we've got pretty good stuff going here. We've got action, and that's what we need. So even though the Forex has slowed way down today, there's no two ways about it. It has slowed way down. What do we expect to happen? We know what's coming. We know we've got NFP Friday. We also know that the Iran war is not going anywhere. There's going to be some pretty good stuff here for volatility. So do I mind taking a position there? I think it's a little bit risky, sort of a higher risk trade, but the methodology is strong. It really is. Essentially, you've got your signal, you've got an inside bar, and now you're playing that break. You may even be able to put your stop loss right up in there somewhere. I would leave it right there beneath your signal bar. Give this thing some time to play out. Remember, the most important part of your stop loss is that it tells you when you have to bounce, when you have to leave the market. And that is really what it's for. So there's a good look at the 9 EMA. As far as everything else, not much developing here. Silver's coming off a little bit. We may get an opportunity on the buyback. That may not be bad. Gold, not much happening there in gold either. Like Tina said just a minute ago, the gold market has been a bit of a challenge today. And it's something that, sometimes these things just happen. Sometimes markets are just a challenge. And when they are, maybe stay out. Maybe don't trade them. That's up to you. All right, we did get a bit of a break here in our WTI market, our pet rock. You can see our point of control. Right now, we are banging up against today's point of control, which is right around 74.89, 74.88. So what did we do? We sold 75s, and now we're down at that point of control. Do we want to take the money? Well, we took a little bit of a draw. It did rally up against us a few ticks. We could take the money right now, plus 110, or we could just sort of let it go and sort of expect maybe a deeper move to the downside. To me, I'm not looking for this market to go anywhere. Let's go ahead and flatten it. Let's take the money, put it in our pocket, and run. Now, that was a relatively simple trade. We knew exactly what we were doing. We loved this area right here. We loved 75 being potentially a sell, and now you've got sort of the new point of control for today setting up right around that 75 area, 74.91. Notice how tight this value area is. Value area high, value area low. We're in an interesting dynamic. The oil, we're not going anywhere. Maybe wanting to sell that upper value area there. Maybe wanting to buy down here. That's just a good look on our discussion, sort of a subtext. Our discussion on oil earlier today, we talked about oil and commodities during the U.S. pre-market, but definitely one that is an interesting market. We're going to talk a little bit more news here in just a second on oil, but it's an interesting place to be right now. And not many people like trading oil, and that's fine, but it can be very, very good. Let me see. T. Marina, happy hump day. Happy hump day, T. Good to see you. Very choppy day. It's extremely choppy, Tina. The US 30 especially. We'll pull up a 30-minute chart here, and I'll show you what I mean. Let me see. Zubo, I think I need to learn British accent. English. Yeah, there you go. Yeah, I don't have much of an accent at all. It's kind of I don't know what you'd call it, frontier, prairie. I don't know. Let's see. Good to see you. Him is Humar. Good to see you. Him. All right, guys. Let's go ahead talk a little bit about these trade updates. We had a couple out that I wanted to cover here. This first one was the U.S. dollar Japanese yen. I really liked this one. This was a 38% pullback from right around that 57.09 level was what we went with, I believe. I believe that was the entry, something like that. It's right around that 157 level. 157.04 was our key zone, and we went right there. At 09, really good price action. You can see that we came down. We tested that area out. Nice big sell-off and then a rebound, something like that. I mean, that took us down there a little bit. Took us down the Q, 156.85, and then we bounced back right there, though. That was a good strike. That was right before we went on earlier today. That was a good firm strike of that zone. And from there, we rallied north. We rallied north up to 157.41. So that right there is about a 32-pip payoff, and I believe we were looking for 35 or 40 pips. I'm one of those traders that if you give me 32 pips, probably going to take it, maybe at least move my stop loss somewhere. This trade, though, if you're still in it, you're not wrong necessarily, but what you have setting up here is a 157.09, so you're back to break even. Really hard to let that much glimmer go and then take a draw and then come back, but it happens. I mean, it happens to everybody. So if you're still in it, not bad. Let's go to a 4-hour chart on this dollar yen and sort of see exactly where we're at. It's panning out pretty good. I mean, so if you do get, I mean, that rally right up there was 157.41. It just wasn't quite what we were looking for. We were looking for a little bit more. So if you're still in this trade, you need a daily close up above 157. If you don't get a daily close up above 157, you probably got to pull the Band-Aid off and just take the loss and move on to something else, because this market, if 38% starts acting as resistance, which it sort of looks like it is doing now, if 157 all of a sudden is the top for this afternoon's trade, we're going lower. And there's plenty of opportunities down here. 156.50 would be the next one that I would really be focused on. So something pretty good there that I liked. It was a pretty good production there. Great Britain pound, Japanese yen. I mean, we're sticking with the yen. We had another trade idea here that really is right at the 38%, just above February's low. So if you do take a look at on your weekly chart, you can see exactly the level we're looking at. It's a monthly retracement level, but it's right around 208, 208.35-ish, somewhere in that zone. So this 208.50, we're interested in. You can see this spike low. Be tough to stay in this trade if we take the buy and then it sells off beneath February's low. We're probably going to have to cut this short and be out much before that. But we do have an opportunity there to trade, and I think it's coming our way here relatively soon. So it may be a good one to attack as we roll deeper towards that NFP session, that's for sure. What we have on tap for today is not a whole heck of a lot. Right, we've got the Iran war blowing up. We've got Wednesday ADP non-farm employment change and the EIA Crude Oil Inventories report. Multi-Spirits, good to see you. I don't recognize the name, but thanks for dropping by. I appreciate it. What we do is we do have a few events here. ADP non-farm change. Don't put much stock in it. We're going to cover it for a minute, but EIA inventories, once again, that didn't really have much of an impact as the market's just still rotating around that 75 level. It's going to take a lot to shake it. So let's go ahead and take a look at Thursday, jobless claims. Quiet day tomorrow. I wouldn't worry too much about that. Friday, U.S. non-farm payrolls. That's a big one. We'll have that for you live, NFP Live. Be sure to pop in. Okay, here's the ADP non-farm employment change. 63,000 is what it came in at, above 50,000. That's sort of our headliner event today, well above the 11,000 from the previous month, from January. S&P Global Services PMI doesn't mean anything. I mean, I hate to say it, if somebody's life work is dedicated into building these service composite PMI numbers, I credit you for your work and your stick-to-itiveness and your ingenuity. However, I'm not overly impressed by the predictive value of these numbers or their ability to move markets. Now, the way that when they release these numbers is just a little bit after the U.S. Open. So it sort of does skew things a bit when you're talking about the first 30 minutes of trade or so. So maybe if you're trading an opening range breakout strategy, the days like this where you get these reports during the U.S. session, they may not be a good idea to trade during that time. The orb, at least, the opening range breakout. Now, if you're trading just any strategy, then you just stick with your guns and manage your risk. But this slate of numbers, I didn't see him having a heck of a lot of importance. I really didn't. But we should cover them. It's a good idea to always know what's hitting the wires. Crude oil inventories came in at 3.475 million barrels, up from 3 million barrels and 15.89 million, way down from last week, but still interesting number. Remember, if you're going to read these summary of weekly petroleum data, you're going to want to go to your third paragraph. That's absolutely imperative that you know how to read one of these. Go to the third paragraph. It's going to tell us everything we need to know. U.S. commercial crude oil inventories increased by 3.5 million barrels from the previous week. At 439.3 million barrels, U.S. crude oil inventories are about 3% below the 5-year average. Pretty strong. Pretty strong since Trump got in there, and really before that, we've been running consistently 5% beneath the 5-year average. So 3% is an improvement. Still lagging where we've been, but it is an improvement. So when we're looking at something like this type of number, it's not just the top line, 3.5 million, but also it always helps to know where we're running compared to our 5-year average. Something to think about there. If you're a crude oil trader, which we've traded a lot of crude today, that's for sure. So as far as our headline event was definitely that ADP employment change, non-farm employment. And the reason why is a lot of people really view it as being a precursor to Friday's NFP number. There is no correlation. So forget that. One number is not the same as the other one. That's for sure. In any case, this was the report. Private businesses in the U.S. added 63,000 jobs in February, the most since July, following a downwardly revised 11,000 rise in January and above forecasts of 50,000. Is there anything out there that really jumps off the page? Not really. Not really. We've seen an increase in hiring and pay gains remain solid, especially for job stayers. But with hiring concentrated in only a few sectors, our data shows no widespread pay benefit from changing jobs. In fact, the pay premium for switching employers, hit a record low in February. So that means that if you were looking to level up with another job, you didn't really get a raise. And that's pretty much the reason why everybody jumps to another job is for money. And you can see right here, this is sort of where we are, maybe the highest in a few months, the highest since last July, but not a huge number, not a huge print like last March. So I wouldn't get too carried away with that. I don't really see that as being a tremendous market driver. I don't see that at all. Okay, we got a question here in the How to Trade trading room. Bobby Bob, good to see you. Coach, stocks, are there retracing or is it a reverse? Well, it's a great question. Let's just go right into, let's just dive right into the US 30 today. US 30 was really difficult, really a difficult market today. Here's your 30-minute chart. Brutal. So, we start talking about intraday price action, which is how, most of you trade. Nothing wrong with that. They're right there, opening bell, ding, ding. You had a lot going on, and then you had a nice clean break. And then we settled in right here. Right here. This has been the story of the day today. This was my misery most of the morning. I was going, okay, we're going to get a break, right? You get a little bit of a break right above this candle. Should have got something really nice. Didn't get much. Just sort of mucking around in the sand. Very difficult to trade that. A lot of times when you get these things that are trading really tight, it is so easy to take losses. That's why a lot of traders just won't do it. They just won't do it. However, if you were interested in maybe taking a late day trade, you could do something like this. Swing low right there, spike low, right up to that daily high. And look where your pullback is, right at 48,664, something like that. That could be a nice late day trade if you can get the market to move down there. You're still bullish a little bit. You're still a little bit bullish. I know that's not the best description of what's happening here, but I don't see this as being just a huge trend day. Early in the day, yeah, I really thought that we had a chance because you had that choppy open, which happens to every time. Almost every open, you're just chopping everybody out, and then you get your break, right, about the second pricing bar of the day, 30-minute. And then since then, we've just traded absolutely sideways. So the pullback zone right up there, 48,664. Is that a pretty good area to attack? I don't think it's too bad. I really don't think it's too bad. I think you might be able to make a little bit of hay there. But do you want to sell right now? Well, there's a lot of sellers that have piled in and put their stop loss above the daily high. Personally, I was looking for a little bit more of a run to the top side on this Dow 30 contract. This is going to just look like a war zone when I show you my chart, but where is it? Right there. We had a lot going on here. I had an upper range number right here that coincided right with a weekly moving average, a weekly 13-period moving average, and you can see exactly what happened. So you look at that chart and you say, Shane, you should have made a fortune just selling this, right? Well, it was a little bit tougher than that. It really was a little bit tougher than that. You saw the 49 area kept coming into play, 48.9. There was a lot of sellers in front of there. They defended it. And then when you finally figured that you were cleared for takeoff there, maybe a break up to 48.9 and a quarter, and it just never developed. It just never developed, and you got absolutely whipsawed and chopped to death. So a pretty good trade, though. I mean, bidding from down here was fantastic. That's Fibonacci level that we have on a longer time frame. But that's just sort of a look inside of my charts. If I was trading the rest of the day looking for a late day trade, it would be the same trade. It'd be a 38%er from the daily range, essentially the New York range. If you were to get a pull off back there, you could definitely get it. Now, are stocks retracing or is it a reversal? I don't, as far as a reversal goes, we step back to our larger time frame and we say, okay, is this a retracement or a reversal? It's just chaos. I mean, it's just absolute chaos. You could see what happened yesterday, right? So you had sort of a bullish day on Monday, right, to start the week off. Well, not really a bullish day, but sort of flat. Then you had the craziness of yesterday where you got the big epic sell-off and then the bounce. And then the bounce towards the end of the day after Trump made the announcement about the Strait of Hormuz. And today you've just really traded inside of these bodies. So is it a retracement or is it a reversal? I mean, I would say if you're talking about the bearish price action, this could be a reversal. I don't see this as being a downtrend, so I wouldn't say that this is just a retracement. If I was betting, I probably would say that, yeah, these markets are just going to sort of do this number out here. Maybe move, maybe accumulate. Of course, that all depends on what happens in Iran. And that's really what we're talking about now, is we're talking about a war market driver that is just bringing an absolute ton of participation in the markets, but it's also not really leaving us much to go on in a lot of these markets. That's a good look at the US 30 right there. I think neither. Jury's still out if you're going to get this break and run. And, if you got an opportunity to buy this, was a 38% retracement, 47,750. That's beautiful. If you get a shot down there again, yeah. But for right this minute, I think we're still in a holding pattern because of the news. All right, let's take a look at gold. A lot of requests for gold. So what do you have here? Just sort of a mess. Just really, honestly, just sort of a mess. You have a situation where you're right around that 13-day EMA, which is about 51.33. Talked repeatedly about that before the pre-market. I said that was a big level. That was a big level. Well, the next biggest level on your radar needs to be down here. It needs to be the washout you're going to catch beneath yesterday's low. I would be watching Tuesday's low like a hawk, 49,996, which is right around 5,000. So if you've got 5,000, there's going to be bidders there tomorrow if we get there. But once that gets washed out, we trade beneath Tuesday's low in gold. That's a significant washout on the way. So I would be watching that relatively closely if we do push those weekly lows. I think there's an opportunity definitely to trade down there, maybe to trade a breakout down there. But as far as, what we should do right now with gold, the choice is yours. You go to your 30-minute chart, take a good look at the price action. It has just been all over this moving average, this 13-period EMA all day long. And it's really ugly. This type of stuff right here, if you're buying that 13-period, you did okay, probably lost here, came back. Now is it a buy or a sell? Probably selling. You're probably selling it as resistance. If you wanted to build a late-day trade in the gold market, something like this may be prudent. There's your sell. 38% and your 13 EMA. Interesting. Are we trending in gold? No, we are not. We are flat. We are flat. As big as the volatility has been in the metals markets, we are relatively flat today. Huge action there. Pretty significant action here. Huge action here. Flat today. So if we're in a flat situation, let's go ahead and fall back on our 9 EMA and see if we can find something in the gold market that's attractive. And you can see we're not outside of our 70-30 envelope on the RSI. Really isn't much there to talk about. 15-minute, 30-minute, no, 1 hour. We had a real nice 1 hour build that came across right in here. I don't know why it's not showing up. Probably takes a minute to calculate. But the 4 hour chart, something like this. We've just got to get outside of that envelope before we can really even trade it or do anything with this strategy. So I don't really know. I'm looking at that going, It's not really that great, in my opinion, in my view. I would be on the sidelines for gold right now. And I know that's not what everybody wants to hear, but sometimes you just have to go to the sidelines. Silver, let's take a look at silver. Silver is just, the technical analysis is not great here. 75 is a huge level. I'm watching 75 closely. If we wanted to maybe get involved at 75, we could throw maybe some Fibonacci's up here and see if we have anything that coincides with it. 78%, you see that's dialed in very nicely. Maybe right down there around 77.50 or 75, another buy. But as far as what to do right this second, there's not much. It's a tough day. It's tight. It's like the markets are taking an absolute breather right now after the frenetic action of yesterday. So as far as, our 9 EMA, is there anything going on with silver on that chart here? 5-minute chart, you see, is that a trade? Nope. It didn't quite get outside or beneath that 30, the 30.70, 30.7. It's not good enough, so you missed out. There was no buy signal there on the 5-minute. How about a 1-minute? 1 minute, you had a buy signal that's set up perfectly right here, and that's a banger. That's a pretty darn good trade. Got in on some good momentum there. But as far as the longer time frames, do we have anything that's going to give us a chance to bid this market and do something maybe worthwhile? Not really. Not yet. Not yet. So there you have it. So you look at your USD, you can see we're sort of rotating around. Doesn't surprise me at all. The market just does not seem to want to move today for a lot of different reasons. I think the biggest one is that they're tired. The traders are tired. Yesterday was a big day. A lot of folks made a lot of folks lost a lot. The folks that made money took today off. The folks that lost money went to look for more money. All right, let's go ahead and cover this issue right here. This is a poly market. This is the betting markets on future events. And you can see right now you're looking at the next supreme leader of Iran and all of these things. I don't know that I would want to be the guy on this list, the top of this list right now. They've killed the last two. They went behind closed doors and voted, and for their next supreme leader, and the entire meeting got blown up. So I don't know that I would want that job. I think that's trouble. Let's go ahead and give Iran a click and see where we think we're headed here. U.S.-Iran ceasefire by when? This is interesting. Is there going to be a ceasefire? I don't see it. March 15th, 18%. So basically they're saying they're going to bomb the rest of the month. Interesting. Very, very interesting there. Let's go back and see if we can find another piece of betting odds. Will Iran close the Strait of Hormuz? This is fascinating. March 31st, June 30th, will Iran close the Strait of Hormuz? That means will they blow something up in the strait? If the Strait of Hormuz is closed, price of crude oil skyrockets. We could easily be looking at $100 Brent. We could easily be looking at $100 WTI. It depends on the size and the scope of the closure. That's the biggest market driver out there for crude oil right now, but that is absolutely fascinating that the odds are that high, 80% that thing's going to be shut down this month. Whoa. That's all I got to say. Whoa. Let's go ahead and see. I want to see exactly this one right here. Is will the Iranian regime fall by March 31st? There's a 16% chance, 17% chance. When are we expecting the regime to fall, if at all? 40% chance in June, and about, a 51% chance for the rest of the year. So add it all up. Uncertainty's creeping back into the markets. All of a sudden, you don't really know when the regime's going to go. You know that they're going to close the Strait of Hormuz. That's what everybody's thinking right now. I have to tell you that this thing, these markets could absolutely explode. They could absolutely explode. We're just sort of waiting. We're waiting for something to happen out of Iran, from the Iran defense. Right now, it's just sort of a scattershot, missiles flying everywhere type of approach. Doesn't really look uniform. It doesn't look planned. It doesn't really look anything. But we are concerned about the Strait of Hormuz. There's no question about it. Definitely. All right, everybody. We just covered about 1 million markets and went through everything. As far as what are we seeing right now? Not much. So I don't know that today's the day to go jumping in headlong and taking on a lot of risk. We did see one thing, though. The CL, our WTI crude, did finally break beneath that point of control. Now we're going to rotate down. So maybe a late day bid. You could be looking at this value area right down there at 74. If it rotates down to 74, that's the lower end of your value area for today. It's not bad. That wouldn't be a bad buy potentially But as far as the rest of the markets go, quiet dollar yen, nice bounce there. We're still waiting anxiously on the Great Britain pound Japanese yen. Silver looks to be on the march, rallying a little bit, but metals have been a challenge today. The dollar has been more of a challenge. Off a little bit, down beneath 99 again on the DXY. Not sure which way we're going. As no one is. But those odds right there, those probabilities of the Strait of Hormuz being closed by March 31st, that is your number one market driver. That is what will shake the markets. Remember, right now, we have an inverse correlation with stocks and oil. If oil goes up, stocks are going to go down. And if oil goes down, stocks are going to go up. That's the way that it's working right this minute. Okay, everybody, I want to thank you for being here. We'll cover a lot more of this stuff tomorrow. We're back live twice again tomorrow with our Switch Markets Live series. We're going to be right there at 13:30 GMT. I'll be up in live for that before the U.S. Open, and then we'll be back at this regular time during the mid-session. If you have any questions at all, be sure to reach out to me over at howtotrade.com. Get your free account. Be sure to send me a message and say hi, at least, that you're watching. And other than that, I mean, there's really no safe conduct. You have to do what you have to do today, but it is a chop fest. Maybe it's better to preserve your capital for tomorrow. Maybe it's better to wait around for the U.S. close. That's for sure. Wizard Alvin, thank you, Shane. The sun just rose here. Well, I hope it's a beautiful sunrise. Wizard, have a fantastic day. I always like to see the sunrise. I'm just always in here looking at computer screens, right? That's the problem. Good to see you, Tuku Lita. Always welcome. Okay, everybody, I'm going to go ahead and sign off for right now. You're welcome, Tina. Have a fantastic trading day. Get some good trades in, and we'll see you back here tomorrow. As always, trade the action well, and we'll talk soon. See you.